Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick is here, but he's not here, but he'll be here in a second, I promise. Retail earnings, that's going to be the theme of today's show. Retail earnings from Home Depot. We had Macy's. We had Walmart. I guess people are just going to the mall because that's the biggest takeaway from this morning, I guess. So we'll talk about all those reports and more. We'll take questions from our chats. Our guests today, two guests today. First up, Nick Chahine will join the show at 8:35. He's the author of Create Income with Option Spreads and also the Benzinga Options newsletter. And then David Seiberg will join the show at 9. You may remember him from Cowan and Company. He spent years there. He spent years as a contributor to CNBC. He's now the CEO of PolarityTE. Is going to talk about that transition at 9 o'clock. Let's bring Dennis on, and let's also bring Joel on. And Joel, give us an update on how we are doing in the overnight trading session.
We got some green here, not as much as we did earlier. Trading up 7 3/4 handles at 41.6550. Caught a bid right off that opened, and we've leaked 14 handles. Not sure the cause for that. Crude up 35 cents at 66.63. Gold now it's cleared 18.50, working its way towards 1900, up $3.40. Silver surges past 28, up 38 cents at 28,665. And Bitcoin, do we have a double bottom here? Right in the 42,000 handle, up $1,000. Let's call it at 45,000. Triple D, I know you were not contributing to those just blow out retail earnings because you can't go anywhere or buy anything except online.
That's true. No, we can buy essential stuff. So our Walmart is open, but remember the can opener line is closed. That's the way it works in Ontario. So one day we'll get out of lockdown, but they extended it. So now we're into the first week of June. They're going to just continue to extend it, and we're never going to be able to do anything. So that is what it is, I guess. I don't know. We're easy going in Canada, man. You won't let us go out of our house. You take away our freedom. Well, okay, sorry. We just take it easy. We don't complain. No complaining. We just take it in stride.
You don't try and kidnap the governor or anything. Well, you don't have governor.
The hospitals, I kind of get, obviously I think it's extreme when they're not letting you go out on your boat, but you're not letting you golf. But the hospitals are full, so I mean they screwed us. They screwed us not getting the vaccines fast enough. Once we get to a point, I think in 3 months we'll be maybe where the states are, where the majority of the population has at least had one shot. And obviously vaccinations work. I mean, you guys, have low cases for one reason, because you guys are going, obviously a lot of people in America doing back to, not business as usual, but at least a little more normalcy. Vaccines are helping. There's no doubt that the vaccines are helping.
So I just got nervous yesterday for the first time in a while because I'm going to Nashville for a bachelor party this weekend. And I saw a video of Nashville from this past weekend at the bars, and it was packed, jam. And I was like, oh my God, I'm going to get COVID. I think it's
Did you go in there?
No,
he's going this weekend.
No, this weekend, I mean. Yeah.
Yeah. So if it's anything like last weekend and there's no mask mandate now, oh boy. All right. Anyway.
We hope those shots work.
I hope it works. So I'm saying.
You got the J&J one shot, though. So you should be good to go. I want the J&J one shot. I want one shot. I don't have to worry about it.
Dennis, the J&J is the least effective one.
Okay, well, maybe, whatever. I'll take any shot.
All right.
They don't allow the AstraZeneca. They got rid of the AstraZeneca one in Canada now, too. So a lot of people I know took the AstraZeneca. Now they pulled it. So, this world. It's an interesting world we're in. And we talk stocks here. It's interesting stock market as well. To figure out this stock market day to day is such a challenge, even figuring the stock market out at all. Because you think, okay, we're starting to look weak, we're starting to go down, and then they come in with their buying shoes on. But I will tell you, if you move away from the stock market world into the real world, people are buying not just,
everything.
certain things, they're buying everything. And now we see that in earnings here today. We should put them all together. Macy's, Walmart, earnings blow it away. We knew Home Depot would blow it away because everybody's buying supplies and obviously construction materials for their homes. But Walmart and Macy's blow it away too. Spencer, Israel, tell us about these reports.
Without giving too many numbers because it'll bog it down. I'll give you one number for Macy's. Okay, check this out. Macy's earnings they beat, but check out this guidance raise. Okay, Macy's fiscal year EPS guidance, it was 40 to 90 cents for the year. That was their guidance. That was their prior guidance, EPS guidance for the year. 40 cents to 90 cents. That was the range. Yesterday they said, okay, forget that range. Now it's going to be $1.70 to $2.12. That's a new range from like mid to high, 50 cents to $1, that area, to high $1, low $2 area for the fiscal year EPS. I don't remember that ever happening with brick and mortar retail. Okay, just a ridiculous guidance raise for Macy's. Walmart said the same thing. They said they're raising their guidance as well. They thought their EPS for the year was going to decline slightly. Now it's going to increase in the high single-digit range. So just ridiculous guidance raises for both Macy's and Walmart this morning.
It's the buy everything market. People are going and they're just buying stuff. We obviously had a year where we were conservative. We're, a lot of people obviously in lockdown, not buying things. We bought some outdoor stuff. Now it's like we're coming out, and what Mitch is saying, it's like the roaring 20s. We're coming out of this, and we're coming out with our buying shoes on, not buying necessarily even for stocks and stuff, buying real things, going to stores and actually buying stuff, like everything. Those earnings are incredible. Macy's, what a 2-day move. I was actually spooked. I wanted to take it long into the report, but I'm like, man, it had a big run up the last couple days from 16 to 19. And now, obviously, it does continue to go higher, but, this is an incredible 3-day move. We're talking about a stock that just went up 30% in 3 days, and maybe it's rightfully so if they're going to have earnings like that. This is a retail. I think you're going to see retail leading the way here today because we've got these earnings. But I mean, if it continues like this, maybe retail continues to lead this market. What are your thoughts, Mr. Elconin?
Not pent up demand. I mean, people saving money, first of all, right? You didn't go out. You need new things. You were putting a lot of money towards your home, and now, you need a new pair of socks, new pair of jeans. I mean, just all the basic things that you buy, and they just did it in 1 quarter. So not a big surprise here. Great 2-day run in Macy's Street, leaning very long into the report. $21. I mean, can we get to $21? They got a pair of highs there. 21.10. That was back on March 15th, and you had another high up in that area right at 20.94. So we'll focus on 21. Can we get to 21? Yeah. And then break out? I think the January high was even at 22.30. But got to get up there, take out 21, or else you might see a little fade because a lot of people, hey, they bought this in the 16 handle on Friday. Now you're looking at 20. So see if they ring the register or just jam this thing over 21, 22, 23. We'll see.
I don't know if you're going to get much of a pullback here. This is such a good report here, Joel. I look at this and think, I kind of want to short into the pop. And I'm like, not on those numbers. I'm like, this is... And you think about it from a valuation perspective. We talk about we're in this value market. If they're going to make $2 next year,
that's
the
huge.
Trading with a PE of 10 now, and it just had a huge run. So there's a case here that if these, maybe like I was saying, a lot of these retailers didn't really make sense that they're trading above where they were before COVID happened. But maybe it does make sense because if they're going to come out spending like this, if the consumer is going to come out and spending like it appears to be going to, with everything. Then maybe these retailers, maybe this is like the turnaround for them. So maybe Kohl's should be back trading above at $65. Full disclosure, I'm long some Kohl's. Maybe it should be, trading up here. Maybe JWN should be trading up above where it was before COVID started. There's an argument here. I mean, the real world is actually doing very well from a retail perspective. The consumer is hot. We know this is driving inflation as well, but I've been saying, they're buying certain things like we know, like construction and stuff, but it looks like today, this is really good news for the retail stocks, in my opinion.
This has always been one of the potential outcomes of COVID, right?
Yes.
Right. Is like there's the camp that believes we've talked about this before, how events like COVID and the pandemic will lead to generational shifts. We saw it happen with the Great Recession, the housing crisis, leads to generational shifts. And there was a camp out there that believes, this is going to lead to a roaring 20s type situation where wages are going to have to go up and the consumer is going to be flush with cash and everything is going to be great. And this is, in that situation, this is what happens, right? Macy's, all brick and mortar retail benefits. And that's always been a possibility. The other side of that coin is that doesn't happen, right? There is no roaring 20. This is a temporary thing. This is maybe it's a result of excess stimulus money that's going to go away soon. We don't know, right? But there's the other side of that coin where this doesn't happen. There is no roaring 20 situation. This is a temporary boom followed by a bust. And that's also still a possibility. I don't want everyone to think that it's not. So keep that in mind.
There's always two possibilities, but that roaring 20s, Mitch was just talking about it too. Looks like it's a possibility. Holy.
You know who mentioned that on an afternoon show about 6 weeks ago?
Who's that?
Sean?
Bob.
Bob
Bright.
Bob Bright.
Yep.
Bob's always got it. Bob's good, with the macro. He figures stuff out usually a long ways before. It's why he's been so well. Bob Bright, obviously the owner of Bright Trading, who started Bright Trading, and he does macro analysis and puts on very large size positions, on his macro beliefs. He gets it right a lot of times. He's smart.
You're right.
Bob is smart.
Wait, I want to highlight what Darren and Darren. I don't know if he believes this or is just playing contrarian. I'm really just giving the other side of the coin here, but you have to wonder: is this a sign of things to come, or is this just pent up demand? Still pent up demand, and we're working through it now. And we're going to get it through that demand, and it'll go back to being what it was before, which was secular decline. Brick and mortar retail is where you want to be. It's all about online.
Yeah.
If that were to happen, then Macy's and on all these brick and mortar stores are going to go back to doing what they were. But that's not happening now. It very well could happen, and we don't. Unfortunately, we don't know. We don't know. There's so many factors on both sides, right? There is the you got to consider inflation. You got to consider interest rate increases. You got to consider wage hikes. You got to consider evictions. They just got rid of the eviction moratorium. What's going to happen there? There's so much to consider on the macro side. I could see a case for both situations. I don't know what's going to happen. Obviously, I don't have my crystal ball today.
Yeah.
But for the moment, we are in a bit of a roaring 20 situation. I saw a headline yesterday. I didn't read the article, but I'm going to paraphrase the quote from the headline, which was, "You name it, we're short." And I mean, from a goods standpoint, we are short on goods. We don't have enough.
Demand is just off the charts.
We don't have enough stuff right now. Everybody is buying everything. We literally cannot keep it on the shelves.
Yeah.
So
it's hard to be bearish this market. Again, we haven't liked a lot of the tech stocks, and this actually isn't great news for a lot of the high growth tech names because people are getting into real stuff again. Obviously we know a lot of tech benefited from this different type of economy that we had in 2020. Now, people are sitting there on their Pinterest. You just think about it. If you're going to get out in the real world and doing stuff, and we're going to get away from it all, I mean, your Pinterest, your Twitter, your social media, I don't think it benefits from that. So not saying that these stocks, these are still, core people use this stuff, but it's not the direct benefit from a roaring 20 situation. What is, and there is some opportunities here. Maybe we should look at Boeing again. Full disclosure, I do have a little bit of Boeing just in the overnight account. But I mean, from a longer term perspective, not even just Boeing, but Norwegian Cruise Lines. It's come back the last couple of days. Maybe we got to start exploring the whole reopening trade seriously again here, because we have pulled back in some of these stocks, and they have maybe given us an opportunity to get back in on some of these names. Like, I mean, even a Southwest Air. We're kind of in consolidation station here. Hasn't broke out. Is this the next one to go? Is Southwest Air the next one to, if we start to see people like doing the travel thing? I mean, we talked about Disney. Did you buy your Disney yesterday, Spencer?
I sold my Ford and then turned around and bought my Disney.
Oh, you sold Ford early.
I know.
I know.
You got to wait till the event.
One day he holds it for 4 months. 6 months.
Wait till like an hour before the event.
Wait till 9:30 at night, Dennis. I thought. Didn't we come to that conclusion?
Yeah, so we can hold it right through the whole after hours session.
Sorry, I have no patience. I'm sorry.
I don't have the patience. People joking, I go bullish, bearish for sure. As a trader, I go bearish, I go bullish, I go bearish, I go bullish. This has been the type of market that I'm getting chopped up on this has been a tough market to call. I made a great call, obviously, back in March, when we had COVID a year ago. There's moments in time, the reopening, I had a really good call on that. I made a lot of money from, calling the reopening back, after we had the vaccination news. I was like, we got to get long on these vaccine stocks and on the pullback there. But I'll tell you right now, the last couple of months, market's really hard to call. And for good reason. I mean, we were just chopping around. We have, even on SPY, we've got nowhere in a month. So there is two camps here, and they both have good cases where, okay, tech stocks are all way ridiculously overvalued, and they're going to come in. But then you also have this roaring 20s, that's going to drive everything else, which could end up driving SPY to new highs. So, we got a bullish market in commodities. So it's a really tough market to call SPY. You can call little intricate little stocks and say, and right now today, I'm saying some of these sleepy reopening plays are probably a buy. I like the Disney. I got talked out of it by Tim yesterday. I did not buy it because I thought it was early, but I still kind of like the Disney as a reopening play. I do think I am going to buy some here eventually. Want to show some life. But this market is a very tough market to call right now. If people, are saying, oh, yeah, this is easy. I just make money every day. I mean, as a trader, you can make money consistently. But as an investor here, it's a tricky market to call, because even what you were saying, Spencer, I mean, there's multiple scenarios here. This could go the other way.
Yeah,
it's 1 quarter. We got 1 quarter of information.
Yeah,
and
it's really tough.
So what are you going to do? You can't say, oh, this is a one-off. You just have to play it. Now, next quarter, there's going to be higher expectations. Is there going to be a big decline? So right now, just based on the information, you have to go with the information you have. You just can't sit around and say, oh, this is a one-off. So I don't know. We spent a lot of time talking about the possible scenarios, but the information that we have now, you have to make your decisions on, and then, reevaluate coming into Q2. I mean, if things, keep going the way they are with the, with the vaccine, the rollouts, Lisa's very, very interested to see what is the net effect of, the mask coming off. Some people are already doing it in the places. So if we're at the point where, hey, masks are off, we're doing things, and it continues the next, then you'll have another quarter like this. I just think it just depends, on what happens. And she's keeping a close eye on the statistics. They're moving the right way, and let's just hope that continues. But different changes, a lot of people are getting vaccinated. A lot of people aren't getting vaccinated too.
That's true.
And there's a lot of kids that aren't vaccinated.
Well, yeah, because they're not even 2 to 12 still in trial.
Right. So
there's a lot of unknowns here, but the stats so far are very promising using the U.S. stats, because we know elsewhere we've had we just don't have enough vaccines in Canada. But, I mean, it's so far promising where you've got cases as low as they were since this started, yet people are going out and doing their stuff. It's kind of showing me that the vaccines are really working, which is awesome. I mean, this is what we want. This is really what, we've been trying to get, like, from, forget about the markets for a perspective. Let's just get our lives back. Yeah, I want to get my life back. I hear I'm in Canada. I can't even go on a freaking boat. So, I mean, I want to get our life back. So, I mean, this is good news. And, and then we got to put on our markets cap and think, okay, well, if we are going to go with the good news scenario, what do you want to buy? I think you're looking at sleepy reopening plays. I think that's what you should be looking at today, not tomorrow, today. And now, I named a couple there. Some of the cruise lines haven't really gone anywhere. The airlines, they've had a couple days where they've started to perk up again here. But, maybe you're getting away from, some of these commodity plays that have just, already had ridiculous moves. And maybe you got to move back into the traditional reopenings, the casinos, the hotels, the airlines, the cruise lines. I don't know. What are your thoughts, Spencer?
Well,
should we look into those areas?
Well, I was thinking more about retail too, because what about
that too?
Like what about like Nike, which hasn't really done anything for a few months, right?
Maybe, but you're buying Nike. The one thing to consider about Nike, which is why I wouldn't be just jumping at this, because they have a huge online presence as well. So it's not like all of a sudden that Nike almost was a sleepy lockdown play. It almost was. Because people were going outdoors and doing more things like, with their running shoes. And we're going to go out again, but they were, last year, it was a little bit of a sneaky lockdown story. It's not like your traditional brick and mortar. There's not just like, boom, Nike store. Nike sells everywhere. Nike is everywhere. It's in your Foot Lockers, yes. But Foot Locker would be more of a reopening play than Nike itself. But Foot Locker is run. I just think you look at maybe you're looking at the Kohl's again. Christian Fromhertz tweeted out yesterday, or some of these other ones, and obviously they're going to be up with Macy's today, so it's tough to buy them on the up day. But
I'm just trying to understand here. So it seemed like we spent the whole. If you go back to the hotels and the airlines, the airlines, for example, we spent the whole way up, sort of questioning that a little bit, and now that they've stalled, you're more convicted.
Yeah, because this goes right back to my trading investing. I don't buy stocks when the train has left the station and is rolling down the tracks.
Yeah.
I make a position, I put on a position when the train is still at the station. I like to see if there's a big move and then a consolidation period. Okay, we're at the next station. Now is the consolidation period is when I strike. I don't want to strike when a stock just moved 20% because then you get the natural correction and you're down 10% on the position. So I like to strike when we're in consolidation station, and we are in consolidation station on a lot of these airlines. I'm just, flipping through charts here as I'm talking. I mean, American Airlines really is kind of in consolidation station. Yes, it started breakout yesterday. Would it have been a better call yesterday? Yeah, but we weren't talking about that yesterday. Maybe you can't look at everything, but on a little pullback to 22, I just think there's a lot. I think some of the automotive companies too. I know you just sold your Ford, but you start thinking, okay, well, we're going to start getting out there and buying things and buying everything. These automotive companies, traditional ones, are probably going to blow it away too. I mean, GM's pulled back significantly here. You've had Toyota started breaking out there. I sold that. Honda has pulled back on their earnings. But there's a million plays to think about, just for buying stuff, retail plays. Not that automotive is retail, but it is to a certain extent. I think you got to go into the people are buying stuff market, like physical stuff.
Maybe physical stuff, anything with physical stuff, the physical world, not the digital world. That would mean a short NFT thing, right? Because NFTs are all digital. And
is there a short stuff ETF or or old stuff? Just buy stuff.
Oh, no.
STUFF or STUF stuff. That's what people are buying.
Well, you could do like
launch that, Joel. We'll all get rich.
Well, you could short
stuff ETF.
You could short the stay-at-home. The stay-at-home ETF, what is that from Direction? They have a stay-at-home ETF. You can short that. It's work. Yeah, WFH, work from home. You could just short.
What about Airbnb, Dennis?
I like it. You know what? At a certain point in time, I still like the Airbnb story too. It's just we got away from nobody wants to go to a physical hotel last year, so Airbnb was almost priced in like a lockdown play too. I like Airbnb actually. $133 is not bad. I mean, it's still the valuation's stupid, which is the problem with all these things. I mean, people are saying, "What's wrong with that?" See, I mean, the valuation. We still got to consider, that valuation, lower valuation stocks are more in than high valuation stocks. So there's multiple themes going on here. One, we've got a reopening, but two, we still hate high valued stocks. Macy's is trading at a PE of 9 or 10. It's not a high-valued stock. Could it start to take off? It could. I wouldn't want to be short it. Could it pull in today on the good earnings? Maybe. Anything can happen. Nobody knows anything. Like people are like, people are in the chat are saying I'm talking without any facts. I don't know what the hell I'm talking about. It's all opinion. I mean, nobody really knows. We're giving you the facts of the reports, and we're trying to come up with a theory
it's right there.
on what we think the next stock's going to go.
They beat. People bought stuff. They're not lying.
Our theory is that people are buying stuff. This is our theory. It doesn't seem to be even. That's a fact. People bought stuff at Macy's and Walmart. It's a fact. So now we got to come up with a theory on how we can profit from it. Just coming and buying Walmart when it's up 4.5% is probably not the play, or 4%. You're chasing it.
Yeah.
But there's other stocks that maybe haven't, responded yet. Maybe there's other opportunities. Maybe there's sleepy ones. Mitch this morning was talking about some of the pharmacy stocks, maybe like a Rite Aid. Maybe we're going to get stupid and we're just going to, people are going in there to get their shots. Maybe they're going to blow it away too. There's some sleepy CVS's in consolidation stage.
CVS broke out. I had this on the monthly, and boy, oh boy, I wish someone would have asked about it before, because look at that. All those highs in 19 and then early 20, and then on the first bounce in January up there, and then ba-boom. What about Walgreens Boots Alliance? Is that left?
That looks okay.
That looks okay. Yeah.
They're healthy. They're near the high. You'd rather buy a stock in an uptrend than a downtrend. I usually like to buy them on dips, but I think eventually Walgreens breaks out. I think eventually CVS breaks out. Rite Aid's always been the dog of the group, so it does funny things. It's had a big couple of days.
Yeah,
but above 20, it gets interesting. Could there be a short squeeze in a Rite Aid? I don't know what the short interest is. I haven't looked.
That thing runs. Yep.
It can run. I mean, and the Reddit stocks too. Let's go.
I was about to mention AIM.
AMC's running here. This is Reddit stocks were going yesterday. GameStop, big day. AMC going. I don't know. There's like a bunch of them, obviously. Bed Bath & Beyond perked up a little bit. Maybe that's one that's going to go. Maybe we should think about a Bed Bath & Beyond. I don't know. That's a traditional box. That actually was a Reddit play. Maybe Triple BY is a play, Joel. What do you think of that one?
Very interesting fact. They did something that I've been recommending for a long time. You know how they had those 20% discounts, right? And they gave them away like they're going out, right? Yeah. So needed to get a wedding gift for a buddy of mine's son. And I'm looking around and there's no 20% coupons. And then what comes in the mail yesterday? A 10% coupon.
Look at this.
They
got some demand coming.
They figured it out. 10%.
They dropped it down to 10.
Lisa's still trying to get a 20% one online. But, I mean, we talked about that. Like, they give everybody 20% off, Then they cut it 10%. Boom. They're making so much more money. But that one is sleepy, right?
I kind of like the Bed Bath & Beyond. It's been going down. It's an ugly downtrend, but yes, you're kind of consolidating above 25. You stop yourself out at the low of the mood, 22.85, so you're risking yourself 10%, which is a little bit too much for my taste. But I think there's room to 30. I think Bed Bath & Beyond could have a little sneakier out if we're going to move into this retail rally. The one thing you have to consider is we're on the first day of real good information from Macy's, Walmart. These stocks have to hold on. Macy's and Walmart turn around and roll over.
Yeah.
Then that whole theory that we're creating this morning goes on hold. I mean, we were talking about AT&T yesterday, which we got absolutely wrong, talking that this could be a way, the dividend is safe. And apparently the dividend's not safe at all, and they're intending to cut it.
Yeah, well, in hindsight, it makes sense because they're selling off a major asset, right? So they're going to have less cash flow.
They screwed up major on this deal. I mean, I didn't like the deal for AT&T. I said that yesterday. I had no idea that they were going to have to cut the dividend to do the deal. This, Cramer, give him some props here.
Oh, he nailed that.
All over it. He was all over it. And I never read any of it. I guess the devil's in the details. You got to go down and look at that payout ratio. We getting breaking news. We're doing the early show. But unbelievable reversal for that yesterday. This is a dividend stock. And you all of a sudden got it. You do a deal that makes you cut the dividend?
I jinxed AT&T all those years. Can you believe it? All those freaking years
on that puppy.
Money. And I own it less than 2 weeks. And they cut the dividend, man.
It happens to us all, Joel.
Forget dividends. Forget dividend stocks, man. You know what? I'm selling my AT&T and I'm buying Kathy Wood stocks.
Macy's.
That's what I'm doing. I go conservative. I'm like 6%. I'm going to hide a little bit of cash. And boom, like the rug pull. I can't wait to talk to my buddy that I talked about this. He is going to. I jinxed it. And you know what?
This is a disaster.
Well, if you think about it too, what does that tell you? Like, do Do they need cash? Is there something they're not telling us?
Well, with this deal, apparently they do need cash. I don't understand why they would do a deal like this. And then we thought, okay, well, they're going to pay down some of the debt, which will help them. But all of a sudden, they don't have enough cash flow to even pay the dividend. So they think they're going to be a more stable company selling off their best assets or spinning off some of their best assets.
$2. What the hell does that thing
slash the dividend in half? Look at that. This is one of the ugliest reversals I've ever seen. You know, where a stock was trading up 34 in the pre-market, you know, the key reversal.
Dog. Give me some.
One of the ugliest key reversals I've ever seen.
I know.
That if you're coming in and buying the dip on AT&T today, I think you are wrong. I'm going to say, could it bounce? Yeah, just sold off 5 straight bucks. I think you got to be a seller of all rally. If they're cutting the dividend, I think you have to be a seller of all rallies.
I might cut bait in it today. I
maybe
mean,
get it back up over 30. Maybe there's like a little whipsaw effect, but I don't know. I would not want to be on this stock.
My original plan was to just sit tight and wait for this gap fill. Well, now it's going to be a gap fill on the upside I'm going to have to worry about from earnings. So I have to look with this this new stuff. I mean, it's really the rug pull of the century, and I just can't believe it.
I if I can play devil's advocate for a moment here,
please.
John Stankey just spent the better part of the last year undoing the 2 major deals of his predecessor, right? DirecTV and Time Warner. So is this like a long-term turnaround situation where he's like undone the work of his predecessor? He's gotten out of that mess, and now they can start to turn things around and grease the wheels. And
but
yes,
they
short-term pain. Yes. Short-term pain for a long-term gain.
What's the long-term gain? Because spin off some of your better assets, slash the dividend, which you never cut.
5G, man. I don't know. I'm just trying to.
I don't know. I'm pissed.
I didn't like the deal yesterday when I thought that the dividend was safe because I was like, well, they're spinning off some of their best. Now I find out the dividend might get
was
cut
that
on
out
this,
originally?
Cut on this. I really hate the deal,
Spencer.
It was out, but it was phrased confusingly, and some names are just better.
Sorry, Joel. I mean, we all get it. I get it. I get this happen to me twice a week where I get caught on the wrong side of something bad. And you know what? You just got to get. I had it happen to me last night. I had it happen to me last night. I was trading TPGY. I didn't know it reported. I missed it. You know, there's a million things reporting. You're doing a million things. I end up buying some of the warrants on a dip, and I'm like, oh, I'm in trouble. You know, what do I do? What do I do? I turn around and hit the next bit, you know, and I eat it for like a significant loss, but I don't play games with it. This happens, you know, to me so you get caught on the wrong side. It's something you make a bad call. You got to work yourself out of problems. The one reason why I've been a successful trader for 20 years is not that I pick winners all the time. It's that I know how to work myself out of losers. I'm quick to work out of losers. It was tpgy.ws. The warrant.
What the hell? That's got T.
I trade everything, man. I trade everything.
What is it?
tpgy.ws.
TPGY is that you can just look at that because it's the same.
Thank you,
Spencer. The warrants will trade off of that.
Yeah.
I looked.
I can't even bring this thing up.
TPGY.
So anyways, I didn't know it was due to report last night.
Dennis, pace
I was making a market and I got hammered. So
did you look at the chart?
No, I don't look at charts, Joel.
You said sometimes
I traded 150 stocks last night. So I'm not looking at the chart on them all. But you're going to get the odd one you get hammered in. Every single night I get hammered in something. You have to. If you're trading 100, 200 stocks on a given night, you're going to get hammered in something every single night. You're going to be on the wrong side of something. I'm trying to teach something here, though, that it's okay to get hammered. It's okay, Joel, to be on the wrong side of AT&T. It's okay. It's how you work out of it that will dictate. There's going to be a lot of people. You're taking the higher road saying, I'm going to sell my AT&T and eat the loss. There is going to be 90%, not joking with you. I don't have facts. I don't have the facts on this, but I will tell you, the majority of traders out there who bought AT&T yesterday at 32 will not sell it at 29.5. They will absolutely refuse to take the loss. And what's going to happen? Not necessarily. Sometimes it's going to come back. Sometimes they're going to come back and they're going to get out at 31. They're going to see, I told you so. But there's going to be a time where this stock is not going to come back. Some of them are not going to come back, and you're going to get hit hard. And, a lot of people are really the victim of that with the spaces and the FUBOs and the ones that have really come off. And some of these stocks are not going to come back. So the key to successful trading is to admit you're wrong quickly. First identify you're wrong quickly, then admit it, and then act on it and get the hell out. I turn around, I'm like, oh crap, it reported. Where's the next bid? I'll eat this right now for 50 cents. $3 stock. Eat it for 20%. It's a warrant. So boom, I'll just eat the 20% loss. Literally a minute later, I'll eat it. Gone. I eat 20%, because I'm like, okay, it's going lower because I can
see housing starts here, Dennis, down 9.5% versus down 2%. Wow, housing stops. Here we go. S&Ps are pulling back. We are now within 4 points of the low of the session. I guess they're not buying houses or building permits are up. Spencer, do you got that number?
Yeah.
Was it really that big of a miss?
U.S. building permits month over month for April up 0.3%. The prior reading was revised downward from 2.3% to 1.7%.
Now you know why your rockets and these things were going down. There you go. You got your fundamental information coming now after the movement in the stocks. Yeah, what do you know? Look at that.
It's probably, the logical thing to conclude is Christian Gallagher just said it is no one can afford to build a home right now. So I don't know. Chris Cacci chimed in there saying, Dennis, in addition to TPGY having earnings last night, there was also an 8K in which they said that their deal with their deal with an electric charging company has been delayed. So there was that to go with.
Dennis was out. He hit the bid. He bought it.
My point being,
sold. Yes.
Point being,
my point being, I was trying to make a point here before we interrupt with a bunch of housing crap. I'm trying to teach, what we try to do on this show is we try to teach traders to trade. I've been prop of 20 years. I've been profitable every single year. I've been profitable in my prop account every single month for 20 consecutive years. And I'm going, and you can ask Break Trading. Every single month in my Break Trading account, I've been profitable every single month for 20 consecutive years. That includes the financial crisis. That was my best year ever, 2008, when the stocks were going straight down. But I'm not sitting here trying to brag about myself. I'm trying to say I don't make money because I make good calls. I make money because I know how the hell to get out of my losers. That's why I'm profitable all the time. I know risk management. So, long-term investing account, I have losers. I've probably had some losing months in my long-term account for sure because it moves around. I'm loaded with SPY. SPY is down in the month. My long-term investing account is probably going to be down in the month. But my income job, my trading job, I'm profitable every single month. And, maybe I'm jinxing myself. Maybe I won't be profitable one of these months. I'm sure it's going to happen. It's been a long streak. But the reason I'm consistent is not that I'm, making awesome calls and I just see charts and I see patterns, I see stuff. It's that when I'm wrong, I get the hell out. I get out no matter what. My Bright Trading account goes flat every single morning around 10 a.m. because then I go and I help my kid with school. So every single morning I clean my account out, 10 a.m. It's clean. So I can't I'm not holding something saying, oh, I hope this comes back tomorrow. You got to clean it out. If you're a day trader, be a day trader. I'm a day trader / overnight trader, 24-hour trader.
Yeah, you got a little different style, Dennis.
Yeah,
but you know what? That style can work. But you've got to use it in your swing trading too. I don't have swing trades that kill me, and I lose 20, 30, 40% on them. You've got to have risk parameters set in. You've got to have discipline. That's the only thing that matters in this game is discipline. As a trader, if you want to be a trader and you want to trade for a living, or if you just want to be a better retail trader, you got to have discipline. Because if you hold on to your losers, eventually your portfolio will be full of a bunch of losers.
Let's bring Nick Shaheen on here from Create Income with Option Spreads. He's our options guy. Nick, good morning.
Good morning.
I'm sure you have many thoughts on the last few minutes.
First, Joel, I can't believe it. Next time you want to buy AT&T going into a pivotal point, let me know. There are facts on the charts. I should have told you not to do it. Oh my gosh. Okay,
no. He didn't just buy AT&T.
Oh, I thought he did.
You bought it for the dividend. You know what though? I'm really I'm very happy because I'm sad it's going down, but I'm glad that I didn't I was going to go bigger in it than I did.
Yeah.
And now, added to a loser is not a great idea, but I'm glad that I have the portion that I had.
Yep.
It got the pop. We'll see if it can stabilize.
So a
but
couple of
definitely
comments
gap
about
fill.
what I've heard this morning. I mean, good debate going on. I'm not reading the comments as far as the tab among the people, but you guys brought points about facts and opinions. You know, when I do my market update video every weekend, this is what I lead with. I state the facts, and then I make an opinion.
Yeah.
And then I say what I'm watching to see if my opinion is correct throughout the week. So the facts are easy to get. You get the reports. You get the other fact that you guys didn't discuss is the actual chart itself. You know, price is truth. There's no lying in the actual past price of something. So you look at that. That's also fact. And with the AT&T, the level at which it failed, which is 34, I think.
Yeah.
Well, if you look back, this was the pivotal level from 2018. And now it's falling back into a level that's even longer than this. So it hit resistance, it's falling back into support, normal price action. Headline or not, this was going to happen. So that's the other fact that could help you with your opinion making process. So it's not all in and all out, and it's manage your losses and know how you're trading. Like you guys, Dennis mentioned the day trading. Yeah, I trade daily, but I'm not a day trader. So
you're a little longer time horizon, but you're not a super long time horizon.
Yeah, I'd rather not trade daily. I'd rather make one trade a year and walk away from it. But that's not reality. So, and as far as what's going on now, I've been tracking. We used to have rotation between small caps and NASDAQ. That's broken now. The small caps and the NASDAQ are on their back foot when the Dow and the SPY were stronger last week. So this week, I'm looking to see if the bearish control continues in the NASDAQ. The bears are in charge in the NASDAQ and the small caps on the lower time frames. If it bleeds up into the higher time frames, then the market is topping. So tops are not pointy things and bottoms should be round. And that's what I'm looking for. Are we making a round top? Whereas they start selling the rips versus buying the dips. So you make lower lows and then you knock against support. So I have like 30 alerts in my inbox to go along some stocks that are great because they hit strong supports. So I have these two things fighting each other. Are the supports going to fail? Then the market's going to go much lower. Or is it going to hold and have rotation from SPY and Dow into these laggards? So this is the fight I'm watching this week. It's been going on for a couple of weeks.
Yeah, it's been tough.
That will determine how I go for the next month or two. Do you fight the tide? Do you realize the tide has changed? Did it change? And how you trade within it. So make sure you track these things before you make decisions. Every stock you trade, every ticker you trade has to work within the overall picture. So if the overall picture,
because you can have the best stocks at the market overall pukes, you're going to be in trouble.
Yep. So there are a lot of trading stocks that are excellent supports, but I don't dare go all in because I know if the market wobbles, it's going down. I mean, pull up an S&P weekly chart and tell me this is a dip. We just made all
nowhere
time
near
highs.
Dip. No.
Right. We just
Not
made
at all.
highs. But the sentiment is I've gotten questions. Do I buy the dip? I'm like, what dip? Where do you see a dip? It's one red tick on a weekly chart. So red happens, but this is where extremism is just breaking everything.
What are your thoughts overall? Are we at a turning point here where eventually, we know that the growth names have really got hit, but it's value that's picked up the slack. So it's like, okay,
what is value?
Well, I'm talking like lower PE names, like the Kohl's and the retail, and there's just a ton of names there.
Okay.
Berkshire Hathaway has really done very well. If you just look, Berk's near the highs.
Yep.
I mean, the value names, there's no doubt this has been a value-oriented market for a couple of months. Lower PE names outperforming higher.
So
PE names.
I would contend that FANG is value at their PEs in the low teens.
I think so too.
Yeah.
I think
but they're not considered value by the experts. They call the NASDAQ the growth. They used to, and they still call it growth versus value in the small caps, which is false. But anyway, I get your point. So one of my thoughts is I'm watching the IWM, the QQQ. If you want to reduce it to facts, watch those two charts. You have actual lines to watch in both of these. So, for example, on the Qs, if you go down, I think the 1 hour chart will give you a good, 1 or 2 hour chart will give you a good slice as to how it's trending down. Lower high trend and see how it progresses. For example, late April, we started at 340 and then the highs failed at 336. in early May, and now last week and yesterday we're failing at 327, 28. This is where the battle is now. So if that fails and the battle moves to 322 and 320, then you realize that the bears are selling, the market is selling the rips, but we're still holding the floor. So if we lose 316 on the QQQ, for example, these are facts, not opinions. The market will accelerate lower, in my opinion. That's where the opinion says, okay, when it breaks, where does it go from there? So technically, it's like an inverse cup and handle that has big downside. Like on the NQs, it's probably on order of 800 points, 900 points on that one. Of course, it's in the 13s now, so it sounds big, but just to give you perspective. So a 10% correction in the S&P will get you back to, quote, the mean on the regression line on the weekly chart. And 20% will get you to the bottom end of the regression line. Those will not change the fact that the bull's in charge over the long term. Short term, you have to know where your stock stands. So on a bad day in the NASDAQ, somebody that's long calls everything is devastated. Whereas somebody that sells puts and put spreads has reds, but they can recover with just stabilization. They don't need a bounce to recover. So that's the difference. How are you trading the market? What are you trading and at what levels, and what are you doing when it breaks down? Do you add to your losers? So you can't make these decisions without knowing who's in control of the price action. So the QQQ, I just walked you through the scenario. There's an exact scenario to the IWM.
I see it. Yep.
So watch what happens on the pops, and if we're establishing, the bears have not established a winning path like this consistently. They do it, and suddenly something comes out, some stimulus, some 300 million trillion comes out, and boom, after the races, we take the reins away.
Another leg higher. Hey, Nick, I want to ask you about Bitcoin and Dogecoin and versus gold, and just I wanted to get your. I mean, gold's having a nice rally. I want to get your opinion.
That's because I shorted it.
That always happens to me too, Nick.
Well, I shorted it knowing it was up against resistance, and I said I'll get stopped out immediately, and I did. So anyway,
But discipline there. You had discipline, stopped out immediately, and you did. Yeah. That's what keeps you in the game.
Well, I knew I was playing
for a living. Discipline.
Yeah, I knew I was playing with fire, and I was like, immediately, if it goes above my level, I'm out, because I was wrong. So the assumption was this, and this was broken, therefore I'm out. So yeah, you want to know what I think about them? I think,
longer term.
Okay, yeah. So people who, I've said it on your show, I don't want to repeat it. Like imagine the first transaction between on gold. One person with the yellow rock saying to the other person, "Give me your goat. Here's a yellow rock." They'll say, "Well, what am I going to do with the yellow rock? What's that do for me? Nothing." So eventually we develop the fact that gold is beautiful and we need it and we want it, even though it does nothing for us. So it has value. So whether cryptocurrencies, first of all, I don't like to call them currencies because they're not stable enough for that, but they are great vessels for value. So you can't deny that, because you don't make the rules. The experts don't make the rules. It's the people that decide whether they have value or not, just like gold.
There's value there for sure.
Because we say so. If one day we say, no, there's no value, there will be no value. That's the only reason. So it doesn't matter if we agree that they're real or BS or whatever. They're there. Like Shiba Inu. Really? When somebody told me that the first time, I thought they were joking. But then I looked at it and was like, wait, what? So I
think there's a big difference, Nick. Back up here for a second. I think there's a big difference when I don't think you could put gold and cryptocurrencies on the same parallel.
Why not?
Because why not?
Yeah. I can argue that crypto is doing more service than gold. Crypto is driving fintech forward. What is gold doing?
Let's see. Do people use gold jewelry? Do they use gold in electronics?
Why?
Do they use gold? So there's uses for it, Nick. There's actual uses for it besides it being a store of value.
Not to the point to where it's a valuable thing. Yes, there's use to steel, but steel is not a precious metal. There's more uses to steel than gold. So use function is not the reason we love gold to the extent we love it. We love it because we think it's rare, and we have agreed as a people that it's beautiful and we have to have it. Yeah. So,
but there is uses for it. There is
very limited, not to the point to where it's 2000. Why is it more valuable than steel, for example? Or although wood is getting there too. You're talking about housing starts. There's probably not enough material to start housing.
To start the housing.
I wanted to ask you that too, Nick.
I talk to people. I have a friend of mine who owns a construction company on a big scale. They're dead in the water. They're struggling because it's just outrageously expensive right now.
This is a point that I was thinking about the last couple of weeks. I don't know if I made it on the show or not, but it's been in my head floating around. I mean, I got to think that these higher lumber prices and higher input costs for KB Homes and NR is going to eventually really hit these stocks, because there's people like for instance, I'm building the house and I'm like, I've got a shop going with it too. And the way the lumber prices are, I'm like, I need the house because I need someplace to live. I'm literally, I don't want to be without a house. But I'm like, I'm going to scrap the shop for now. I'm like, I'm going to hold off building the shop because I don't need the shop right away. And why am I going to pay a ridiculous amount for lumber prices when I can build the shop, and how many other people that maybe were thinking about doing a project like, no, I'm going to hold off on that. So eventually here, that probably, I'm going to go build a new house. Well, I'm not going to build a new house at these ridiculous prices. So I think eventually it does hit. Like, you think naturally, Lennar is benefiting because there's so much construction going on, but because the input costs are so high, I think the home builders are maybe a sell.
They're pulling back.
Prices are ridiculous on everything out there, and these trillions of dollars we're releasing. That's, I said it last year that the central banks are killing cash. This is we're starting to see it. I mean, now every conversation from the government has a T in it. I mean, when did this happen? $1 trillion is a lot of money, and it's going to devalue money, and it's going to cause people to pay. I told you about my son selling his truck. We paid $3,400 for it. He sold it for $8,500.
Crazy.
6 months later, with like 330,000 miles on it. Basic long bed, extended cab, nothing two-wheel drive gasser, nothing selling point for $8,500. It's just absolutely crazy. So back to your Bitcoin facts. Use it. Use the charts. So Bitcoin falling into 40,000, 44 to 40 has been in contention for a while. Selling it going into that is wrong. Buying it for a trade is a better idea. If it bounces here and it loses the lows that just set, 41.8 or whatever it was, 42, then it could have another leg lower. And it could be big, but it's going to go through a lot of support cluster from whatever happened in last January around 2021. So, and then there's a place where you can buy it into that. As far as a concept, don't fight it. It's you can't call something fake when it costs that much, because there's enough people who believe in it. Whether I believe in it is immaterial. And in fact, it does serve a purpose because it's making our financial technology progress forward for whatever reason. The more of them you have, the more stuff they're going to come out with to facilitate the process of the transaction process going forward. And last year proved to us that we need it.
Nick, I got to ask you, do you have a favorite shitcoin or what?
Do I have a favorite coin?
Yeah, do you have a favorite?
Yes, I do. Actually,
let's go. Wait on me.
Wait, 2 months ago, I opened an account at crypto.com. I was like, I'll fund it. I opened it to buy Ethereum when it was like 1,300. Okay. I don't remember exactly when. I posted in the chat room. I still don't own it. So I finally
to buy it though. The intentions were there.
Yes, and it went to 4,400. So I made fictitious profits.
Fictitious profits sometimes are better than real profits.
I tripled my non-money. So, but then the second one I wanted to do was Cardano. Just for the fact I'm playing the logic is I'm following the logic of the quote experts. So I remember when it first came out, the bald guy on CNBC with the hoarse voice, I don't remember his name. He went out he went out and said the reason and Tom Lee, the broken neck guy, he went out and said, dude, you want hey, facts. So you want to chase Bitcoin because it's chasing the market cap of gold. I thought it was a silly reason. I mean, but if that's what they're using, and guess what? They're still measuring that. Oh, it's 1 trillion. It's catching up to gold. So I thought Ethereum was going to do that. And that was the reason I wanted to buy it. And it did pop. And Cardano, I think Ethereum people started Cardano, or at least one of them. I figured
Uh,
if he did it one time, he knows some people behind closed doors that he can do it another time, and that's why I picked ADA Cardano. So
They're all talking about the Cardano too. I want to own that one too.
Yeah, nothing that I know that this is better than that. I'm just trying to find chart help and logic to see if I can gauge it. Also, you have to look at, I'm starting to look into like how many available they have. You want something that kind of looks like Bitcoin. If you look at Bitcoin, it doesn't have billions available, whereas all the other ones have like billions available. So you want something that is like rare. Yeah. So anyway, I'm not an expert in Bitcoin, but I can tell you, I read their charts and they obey the technicals on the charts. So if you're confused about Bitcoin, ditch the experts, go back to your charts, and you can trade it successfully. Trade it successfully. If you want to invest in Bitcoin, in my opinion, you do it like you did gold, like the olden days. You buy a little bit at a time over years, you'll be okay.
Yeah, that's a good
dollar cost average.
All right, Nick Shaheens, the author of Creating Income with
Thanks, Nick.
Friends. He runs the Benzinga Options newsletter. Thanks a lot, Nick. Joins us every other Tuesday. We got a couple minutes before I'm going to bring on David Seaburg here, guys.
AT&T again. We just got to go. I have never seen Jim Cramer talk down a stock in a company as much as he is talking down AT&T. I mean, he is just hammering the stock, and he hammered it again last night. He called it a clown show. I've never seen Jim Cramer this vocal against what a company has done. He's on CNBC again right now, just talking AT&T down. And you know, it's one thing, Cramer will get convicted, but this is like 2 straight days where he has just been, you know, just beating on AT&T now correctly. So I just, you know, just showing you the influence. I mean, the reason AT&T, people are saying, what is wrong with AT&T? Jim Cramer ran the most bearish piece that I think I've ever seen, you know, Jim Cramer run. He usually runs bullish. He doesn't usually talk that bearish on CNBC. And then, you know, last night on Mad Money. And then, you know, he's, you know, on it again. He's talking it down again here. So, I mean, he's beating on AT&T, and maybe rightfully so. So just want to let you know that he's on CNBC again talking it down.
All right. I want to mention the MGM headline from yesterday. The report from, I guess it was over the weekend or yesterday, that Amazon is maybe in talks to acquire MGM Studios. MGM Studios is not the same as MGM Resorts. MGM Resorts is ticker MGM. It's a different business than MGM Studios. Nonetheless, ticker MGM did hit $41 on this headline. Even though it is a different company entirely, not related to the company in question, MGM Studios.
Huge pop on this last night, and then they realized, oh, MGM Resorts doesn't own the studios anymore, and it came all the way back down. That's just dumb algorithms. See MGM, oh, buy Amazon. And then, you know, it's not even like a full, it's from the information. It's an opinion piece, really, more than anything. There isn't, you know, we can't just come out and say, oh, yeah, they're buying MGM. You know, this is one source that said there may be, this was a rumor. This was just a rumor. It wasn't even a really strong rumor when I was reading it. It was from one source. Yep. So, I mean, maybe they buy MGM Studios, but if you're going to trade on rumors, make sure you got the right stock. Make sure they actually own the company and that's getting bought. So MGM Resorts, like you say correctly here, Spencer, is the casino. So we're not talking the studios. Nope. So anyways, whoever's buying MGM up to 41 last night gets punished. They get a little bit bailed out by JP Morgan here this morning because it actually started trading in the red last night after everybody realized it was wrong stock. It gets another pop-up this morning because JPM upgraded MGM Resorts. So that's helping MGM. That's why it's trading up this morning. So in a counter to what they were saying, you know, on some major media, MGM is not trading up on rumors that Amazon is going to buy it. MGM, the stock, is trading up because JP Morgan upgraded this morning. It is not the studios. So thanks, Spencer, for letting us know.
We didn't even really talk Baidu. They blew it away. They're up. Actually, a lot of Chinese stocks are up this morning, whether it's IQ, they had earnings, Baidu had earnings. They're both up this morning. We didn't really talk Home Depot either, but I mean, we knew they blew it away as they did, and they're up as well.
They did.
So,
we didn't even talk Home Depot. Holy mackerel.
They absolutely blew it away. We knew they would. The question is this as good as it gets for Home Depot? I think it is. Just as I was saying with, I think, the home builders, and I'm going to take it back to that. I think the home builders themselves. I think the home builders themselves. I think you're going to see, and not only interesting charts, just interesting thought process. Thinking like There's people who are going to abort mission on construction projects. This is going to slow down. It went so stupid, the pricing, that there is people that are like, okay, like I said, I was going to build a shop. I'm going to hold off now on the shop until the prices come back down. There's a lot of other people who are saying, I'll wait a little bit until these lumber prices start to come back down. So there's crazy demand that we're seeing. We're already starting to see the lumber futures come back down. It's down to like 1,300. So we have pulled down on the lumber futures already. But this is not good news for the home builders. And this is not good news for Home Depot and Lowe's either. I think Home Depot's and Lowe's is in an environment right now that this is as good as it gets. And I would actually sell the rally in Home Depot today if I was long it. So I would sell the rally in Home Depot. Lowe's is due to report on Wednesday. They're probably going to beat as well. So I'd be more inclined to sell the rally in Home Depot than Lowe's, because Lowe's is going to end up beating too. But I think this quarter was as good as it gets.
All right.
I'm a seller of Home Depot.
All right.
Just my opinion.
Dennis, good luck out there. Joel, I will see you for the
Okay, gentlemen, I'll stick around here, and I got about 6-7 symbols here, so I'll get on it. See you guys at 3:30.
All right, I want to bring on our next guest here, David Seiberg, who spent 25 years at Cowen and Company, in healthcare research and investment banking. He was also a frequent CNBC contributor, and he left that to become the CEO of about that company, PolarityTE, ticker PTE. Going to bring David on now. David, good morning.
Good morning.
Us a little dark, but I can see you more or less, and that's.
Is it really dark? I apologize. I mean, I know the setup is. I get a lot of light around me, so I apologize for the darkness, but we'll get through that.
Yeah, we can work through. So, David, I've been meaning to talk to you over the years, is because I was very interested in your transition. You left Cowen,
right?
You sort of left the whole Wall Street thing, and you moved over and you became the CEO of a biotech company. I'm just curious. What was it about PolarityTE and why did you make that transition?
No, absolutely. I appreciate the question. I mean, I think that's a really, really important point to make here about the company. I did spend 25 years in Wall Street. I was fortunate enough to really build an amazing career working at Cowen and Company. I also did, as you said before, CNBC Fast Money for many years as well as a contributor. And, they're just a great part of my life. I sat on the board of Polarity, for about 4 months before joining it full time. And, I learned a lot about the technology they had, really excited about the technology. And I believe that, it was really a chance for me to come work at a company that had amazing technology and really build it and scale a business that can really help save lives and improve the lives of human beings. I lost my mom to cancer when I was 10 years old. I knew at some point in my life that I'd love to make a transition to work at a company that really was helping people. And this is a company that's truly helping people. We're saving lives. We're saving limbs. So, learning about the technology, learning about the idea of really putting my skills, from Wall Street into play here, and work and rebuild a company like PolarityTE. It was just a fascinating opportunity, and I jumped at it. So when the board came to me and asked me to come and help restructure this place because there was a lot of work to do, I jumped on it. So I'm really happy I'm here, and I'll tell you, it's been a lot of work. We had to do a tremendous amount of heavy lifting over the past year and a half to 2 years, but we're really in an amazing position right now to see this company, really accelerate higher based on the work we're doing.
So you were a healthcare analyst, and I'm just curious, like what qualities, what characteristics do you look for? Did PolarityTE have?
Yeah.
Aside from you naturally wanting to transition anyway, I'm sure a red flag when you see one, right? So yeah, I'm just curious, like what they had or didn't have going for them.
Well, I thought was interesting as an investor when I first joined on the board. I had invested in the company early on. And really invested because they had a revolutionary technology that really was going to, change the way, wound care existed. So Skin TE, for those of you that aren't aware, is really a product whereby you take a small skin sample, a full thickness sample of a healthy portion of the human skin, and you use that. We put it through our technology, and we create a paste-like substance that we spread over that wound. To regrow or regenerate full thickness skin, essentially, with the properties of hair and follicles. It has sweat glands, etc. So instead of the traditional skin graft, split thickness skin graft, or these skin substitutes that are on the market. We're actually, regenerating full thickness, three-dimensional skin, in putting a patient's life in a much, much better position. It's pliable. Like I said, it has sweat glands. There's no itching or, cream that's necessary to apply to this afterwards. You literally have your own skin back on your body. When I saw this, of course, vetted it out very heavily through our different channels and realized that they really have something different. The one thing that they did was launched through this category of a 361 pathway product. And there was a lot of high expectations around how quickly this product could really penetrate into the market. Those expectations were incredibly high. And of course, if you disappoint Wall Street once, shame on you. Twice, shame on them, really. So at the end of the day, there was a little bit of disappointment that surrounded the commercialization of this product. But the company never should have commercialized it as quickly as they did. That was a real false start as far as I'm concerned. So, now we're going down a pathway, which is the BLA pathway. And coming out of this, we expect to have an asset that has a tremendous amount of value. I'll say to you, we're entering into a market that has a huge patient population of need. So, this is a really incredible technology. You say I was an analyst before. I ran all sales and trading at Cowen, or trading at Cowen. And essentially, I've obviously vetted out different companies like this before. Seeing what this company did, especially being on the board, it gave me a lot of great insight and clarity to this technology. Was a huge, huge, huge reason for me joining this company full time. I knew that if I came in, I could really make a change, and we're starting to do that. We're going in front of the FDA right now for our BLA, and we're really excited about our opportunity.
So you had earnings out on Friday, and along with that report, you gave an update on the regulatory framework. Can you explain? It sounded like from the release that you're going down a different regulatory pathway for this.
Right. We're transitioning, as I said, from a 361 pathway, which is really a self-designated pathway, to a 351 or a BLA approval pathway.
Can you explain?
A formal biologic approval, essentially going down the FDA to get a formal biologic approval for skin TE. One thing that I talked about in the call that I think is really, really important, and investors need to get their head around, this asset has already been used in over 1,200 skin TE applications to date. We've had 0 adverse reactions. We've generated a significant amount of supportive data. Actually, last week, earlier in the week, ahead of earnings, we released our data from our DFU study, our multi-center randomized trial with over 100 patients. That data was really, really important, and it came out and it was significant. I mean, it showed that 50 patients which received that it basically met the primary endpoint and secondary endpoints of the trial, which is incredibly important. I can get into detail if you'd like. But the reality is we've got a lot of supportive data around this asset, real world experience and clinical supportive data. And we know this asset really fills the void of an unmet need for a very large patient population. We've got IP. We now possess 11 patents or allowed or granted patents for skin TE, 2 in the US and 9 internationally. So, I look at it and say, I've been a biotech investor my entire life. I've never had the luxury of investing in an asset that offers really this level of insight to the potential success or failure of a clinical program. And when I say that, safety has really been proven out here through all the treatments that we've had over the years, which is roughly 1,200. And efficacy, we know this really works well, especially in a lot of difficult to treat wounds with exposed tendon and exposed bone. I mean, we really have found the sweet spot for skin TE, and we saw adoption really pick up with a very, very small sales force. If you notice our earnings, I mean, this is during our last quarter, we were significantly above where expectations were, and we were because we've really been able to manage and understand the way this product fits in to the workflow and the lives of doctors and how it impacts patients and where the sweet spot is. We only have 8 sales reps right now, or had 8 sales reps essentially penetrating the market, which isn't really a commercial effort. It's really an awareness effort. But with 8 sales reps, we are able to generate on average, if you annualize our last quarter's revenue, it's roughly $850,000 per rep on an annualized basis, which is significant. So we're really showing that this asset fills a void from an unmet need, and importantly, there's safety profile and efficacy profile around real world experience that really de-risks this going into what we're entering into, which is the BLA process to really enhance the value of this asset. Once we get that, you have an asset that has a tremendous amount of value, and it's really off to the races for us to make sure that we commercialize it effectively.
Do you have any insight into the market reaction? Is that because the BLA pathway will take longer to get through, or what?
Well, it's a good question. I really think that it's a little bit of clarity. Like, for instance, we are submitting, we have said that we're going to be submitting our IND in the second half of this year. And then we hear back from the FDA, and we receive, hopefully, after a little bit of back and forth, an accepted IND. Under an accepted IND, you have more clarity as far as what kind of trials are necessary, et cetera. So I think right now the market's just digesting what is the FDA going to ask from us for these trials, and that clarity will allow investors to really back into valuation. But I would say valuation right now, this company, in my opinion, we've gone through a lot, and we are financed. We have a lot of data, real world data and data we've generated. We've got, again, over 1,200 plus patients treated with 0 adverse reactions, supporting the safety of this product. And we're going down a pathway that's going to create real value for this asset. So when you think about another company, let's say a drug company going through trials, you're really flipping a coin to whether or not the outcome is going to be a certain, a positive outcome. In this situation, you've got an asset that's been proven out in the real world, and now we're entering into a clinical, stage, trials of this product to come out with a BLA. And let me tell you something. I mean, it's set up really well, in my opinion, for from a risk reward perspective.
So the IND, the investigational new drug application, do you have a timeline on that, or is that?
We expect we're going to be submitting our IND, a submitted IND by we previewed with the street in the second half of this year. So we're hoping to submit that as soon as we possibly can.
Okay.
And then it takes a little bit of time to get response from the FDA, maybe a little back and forth, but we're hoping to have an open IND. As soon as we possibly can get one open.
Got it. David, before I let you go, I just want to ask you, because you were listening to our show before, and you were chiming in on the background on our crypto conversation, and not that any of us here are crypto experts, we certainly are not. But do you have any thoughts on that space right now? Or are you?
Yeah, I feel like I remember on Fast Money we talk about Bitcoin or Ethereum or any of these crypto in general every day when Bitcoin was surging up toward 20,000.
Yeah.
I'm a big fan of Bitcoin. I think Bitcoin's going to continue to move higher. Huge fan of Ethereum as well. I think the difference between this move higher and that original move up to 20,000 is, although you still have speculative money in the game here, you're seeing a lot of usage. The usage narrative really start to develop. So let's back up. When you look, when we saw Bitcoin in the past, several years ago, rally up to 20,000, what we then saw was a lot of these other tokens, if you will, begin to be propagated, and these were utility tokens that have all gone bust for the most part. But a lot of those tokens, let's remember, were funded by a lot of the capital that was made during that Bitcoin rush, right? So you had really a lot of disposable, if you will, investable capital that was being poured into these utility tokens that ended up crashing down. And as Bitcoin rolled down, there was a lot of preservation of capital that was starting to come into play, and you just had this sort of slam down on or crash, if you will, on Bitcoin and Ethereum and all these utility tokens that, for the most part, went bust. Now we call them digital assets, right? We've got a very different setup, in my opinion, for Bitcoin. What was a speculative setup out of the gate that took it to 20,000 is now a very different setup. I think, of course, there's speculation in there, but there's a real usage narrative here that's coming into play when you see the adoption of other, whether it be payers or other companies using and adopting Bitcoin from a payments perspective. Let's also remember you've got a significant portion of the world that's still unbanked, right? So the idea that you have a technology or a currency, if you will, that allows people or individuals in other countries that don't trust their government, They don't trust the banking system in that country to really invest into an asset that, or preserve their capital into an asset that they have confidence in. I think is going to start to build. And again, although we're not there yet because technology needs to improve clearly, and there needs to be more, a little bit more stability within Bitcoin. I think we're getting to the point where that's going to become a narrative that is, going to accelerate this higher as well. But let's not forget the fact that the blockchain technology, the premise that Bitcoin has been built off of. There's been investment by the likes of JP Morgan and all these massive banks for the past 15 years, essentially, to really figure out a way to streamline their businesses. They love the idea of blockchain technology to support clearing and settlement and all that stuff, and they're willing to invest in it. But there's a lot of them shun Bitcoin mainly because it's going to trample on their business. So I would say to you, look out. I think Bitcoin's going a lot higher. I'm very supportive of the asset, and I think that there's a lot of really interesting things on the horizon here from the standpoint of adoption and usage.
All right, David Seiberg is the CEO of PolarityTE, ticker PTE, former Wall Street executive. David, thank you so much. I'm glad I finally got to ask you that question because I would mean to ask it for over a year. So thank you so much for joining.
Great, thank you. Thanks for having me, guys. Appreciate it, man.
Thanks a lot. All right, it is 9:16, guys. 9 minutes. What am I saying? 9 minutes. 9 minutes or 8 minutes now until David Green is going to get on his stream and live trade the open for us at 9:30 is when the open will start, and he'll be on at 9:25. So this stream is set to redirect to that automatically. You shouldn't have to do anything. It should just redirect to David Green's stream. Here is the schedule for today. You've got pre-market prep right about to end. David Green trading live at the open. SPACs attack will be myself and Chris Catchy today. Mitch had to go for an emergency root canal, unfortunately. So he'll be on painkillers and not, or actually he'll be in the chair, I think, for the show. Power Hour at noon. Get Technical at 1. Benzinga Crypto Show at 2. Biotech Buzz back at 2:30. The At the Close Show at 3:30. A full hour of Cannabis Insider today. We have an earnings special. We are talking to who are we talking to? We're talking to the parent company. We're talking to Verano. We're talking with Jushi, I believe. We got earnings. All three are or have already reported earnings, and we're going to walk through all those at 4 o'clock. So Cannabis Earnings Special Show at 4 o'clock on Cannabis Insider. We've got Trend Spider with Jake Wujastic running through his raindrop charts, special indicator that they developed at 5 o'clock, and Trading Nomadic wrapping up the day at 7. So there is the schedule. And as I've been mentioning, we are nearing the 100,000 subscriber mark on Benzinga's YouTube. And for that milestone, we are running a contest, and that contest will involve giving away a free share of Tesla. Yes, a free share of Tesla. Instructions on how to enter the contest are to come. Don't do anything yet. Instructions coming. We're giving away more than just a free share of Tesla. We have some other stuff as well, but the free Tesla share is kind of the highlight of the giveaway. Instructions to come on that, but I'm just teasing it. It'll probably start, if not later today, then tomorrow. But just keep that on your radar. We're not giving away any Benzinga swag. We're giving away some, cool, really, really cool stuff. Real extra cool stuff for the 100,000 subscriber goal. I'm not sure when we'll get there. We're at 95K right now. Maybe we'll get there in a few days. I'm not really sure, but keep that on your radar. How many likes are we at today? We're at 5K right now. Maybe we'll get there in a few. Mute the old YouTube. We're at 300 likes. Let's get to 500, guys. 500 likes is the goal for the end of this stream. Let's see if we can make that happen here. And then I'm going to just do some housekeeping items, thanking our guests, David Seaburg and Nick Shaheen. Guys, you can always subscribe to Nick Shaheen's newsletter, by the way. I believe the link is in the description, and I'll put it in chat right now. Give me 1 second to find it. Where is Nick's newsletter? 1 second. All right. I don't know what happened to his newsletter. I'll find it for you guys. Hold on. I'm not going to leave until I get you the link to Nick Shahine's options newsletter. Man, I don't know where it went. It's usually in my doc here. Huh. It also just got really, really quiet in the office because our AC just turned off, and now it's like extra quiet, and I can hear myself speak. All right, I'll post that. I'll post that in the chat, or I'll add it to the description after we're done here. I'm not going to search for it now, but I'll edit the description. I'll put Nick's newsletter in under his name in there. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. The opinions of our hosts and guests do not represent those opinions of Benzinga. And I think that's it, guys. YouTube 20 is your promo code for Benzinga Pro. Go to pro.benzinga.com, get a free 2-week trial, or enter the code YouTube 20 to get a 20% off any Benzinga Pro subscription. If you have your own platform, your own audience, your own following, you want to become a Benzinga affiliate, you can do so. You can earn 30% on every subscription you send our way. Go to benzinga.partnerstack.com. The link is up on the screen there at the bottom, benzinga.partnerstack.com. Don't forget to subscribe to Benzinga or Benzinga Clips on YouTube. We appreciate that. Thanks to all of you in the chat for hanging out with us, both our YouTube chat, our Twitch chat, our Twitter chat, our Benzinga.com chat, our Benzinga Pro chat. I do my best to watch them all. Thank you all for participating and hanging out with us. We appreciate that. All right, David Green is starting in a couple of minutes. I'm going to sign off again. This will redirect straight to that video. You shouldn't have to do anything. He'll go live at around 9:25 or so, trading through the open. And I will see you all for SPAC's attack at 11. Good luck at the open. And